Hello guys, welcome back. Happy Easter and welcome to another stock market update. Now remember, from the past few weeks we've been watching the NASDAQ very closely. We ended this 5-wave sequence and now we are in what I believe is a corrective pattern that has not resolved yet. This was the A leg of our corrective pattern. This was within this A leg, you have your ABC. This is our B wave of the corrective pattern. We have our A, B, and as I predicted last week, I said it's going to be a very bullish week, and it was towards the end. And we are nearing the end of our B wave. At the completion of this B wave, we have to be careful because this could play out one of two ways. This could play out the way I'm expecting. We could have our A, B, and then we get a C wave down, which could be 5 waves. That could be one scenario. And I'm not like these psychos on Twitter who are expecting, the great crash of 2021. I'm not expecting a crash down to here, but we could see a 10-ish or so % correction that could happen in 5 waves downward back to, it could come back down to the election price level. Okay, that's one scenario. Or the bullish scenario, the more bullish scenario, is that this was the correction ABC. This is all we're gonna get, and then this started a new 5-wave sequence. This was 1, this is 2, and we can be in the process of 3. I think my scenario is gonna be best supported if the market continues to gap up like it has like this. So the past 3 days have been really bullish. We had a gap up, open, and go. And then we gapped up even more the next day and we closed at the high of the day. If we can continue to aggressively go higher and higher, I mean, the market cannot sustain all these gap ups. And if we hit this area of resistance, the previous all-time high in the NASDAQ, that can serve as the brick wall that can ricochet us down to possibly the election levels back here. A bit of fundamental news that kind of changed the dynamic towards the end of the week is they had the job numbers on Friday while the market was closed. Those job numbers were really positive, and the way that affects the market is the bonds or the interest rates, that's going to continue to let those rise aggressively. And when the interest rates rise aggressively, that's good for some of value stocks, but it's been pretty bad for the tech stocks, the NASDAQ. And when those job numbers came out, you saw a switch, you saw a change in dynamic. The past 2 or 3 trading days have been all NASDAQ. The NASDAQ has led the way, but when that news came out, the S&P futures led the NASDAQ. So we could be seeing a switch up back to where there's more weakness in the NASDAQ and strength in the S&P. Now, one stock that I watch very closely to give me a tell on the direction of the market is Apple. Apple has been awesome the past few years in giving a tell on which way the market is going. And right now in Apple, what I'm seeing is I'm still seeing weakness. Right now, Apple is trading in this triangle, and the break of this triangle is going to tell us, which of these scenarios in the NASDAQ is going to play out. If we get a bullish break in Apple, then this could be a 1, 2, 3, and we break these highs and we just keep running higher. However, if you see a bearish break in Apple and it breaks not only this lower trend line, but also this low from back here, this 116 level, then that is going to support my thesis of what I think is going to happen with the QQQ, the NASDAQ, heading lower. So that is all I have for you today. Thank you guys so much for watching. Make sure you like the video, subscribe, leave comments. Let me know what you think. Are we headed to the moon, or is the market going to come in a bit in the next couple of months? But yeah, so thank you for watching. Have a great week trading. Bye.